Thanks for tuning in. Hi, I'm Desiree Duret and this is Marexis TV. And today we talk about Brexit and the impact of Brexit on the polymer market. We are glad to have in the studio Marexis UK country manager Andy Clayton. Andy, it's great to have you here.
Yeah, thanks for having me, Desiree.
So how is the mood in the UK at the moment? Tell us.
Oh, Desiree, where do I start? I think in two words, we could sum it up by saying Brexit fatigue. We've had now about 3.5 years since we voted to leave, and as of last week, we had absolutely no progress whatsoever. We've had various deals, 3 times rejected, and I think you could say that the British public is now completely fed up with the whole process. And I would say, while businesses want to leave with a deal for the UK, I think even if we finished now and just finished it and got it done with, people would be very relieved.
Like no matter what happens, just get it over with.
Get it done. Yeah, I mean, the chances of leaving with a no deal as of last week were put at about 50-50. But with the various meetings with Boris and the EU in the last few days, I think maybe we're edging now towards a deal.
So what are the effects and the tangible impacts of these uncertainties?
Well, with uncertainty, business needs certainty to be able to invest. And we've seen over the last 3 years a number of new projects being put on ice. And apparently the investment level in the UK over 3 years has dropped by about 20%. So it's a major impact. And that has led to an impact on a reduction in productivity rates in the UK. Another aspect is that there's a very much uncertainty on what polymer interest or import rates will be in terms of tariffs. So if we were importing, for example, from the Far East or from Latin America, and it comes in after the 31st of October, we have no idea what the tariff rate will be. And I personally spent about 3 hours talking to Customs and Excise on Friday, asking one question, what would the rate be? And I got 3 different answers. So it's very difficult.
Oh my. Of course, there have been quite a lot of surveys showing that a no-deal Brexit would practically be a nightmare for the polymer market. So do you agree with that?
Absolutely. If we had a no deal, it would throw us into chaos. Plastics are in the top 10 of UK exports and the top 10 of UK imports. And it's been calculated that with a no deal, the extra cost of imports would be about £540 million, and the extra cost of exports about £340 million. Secondly, UK converters would face tariffs on exports of finished goods to the EU. So all our customers in the UK would have a problem with that, I'm sure. And the other great worry is that we're going to see chaos in the channel ports. Already we have giant lorry parks to hold 2,000 and 3,000 lorries in case there's a problem. But all of this adds cost to production. And I was reading the other day that stopping a car production line for 1 minute costs £50,000.
Wow.
So you can see what's at stake there.
Absolutely. Oh my, yes. Okay, there is of course a huge impact, or would be a huge impact on the UK, but what would you expect to be the impact of a no deal on the EU?
Well, the UK is the 3rd largest polymer market in the EU, and it's a very important car market. So, for example, the UK is the 2nd largest car market in the EU after Germany, so you can see that would have a big impact. The UK is also an important source of PET, LDPE, linear low density and PVC. So if there was a no-deal Brexit, all of these products would have tariffs if they were being exported to the EU. So that would have another impact. Also, quite a shocking statistic that I have for you is in 2016, the UK was Germany's 5th largest trading partner. Today, we're number 13. So you can see how dramatic it's been even before we've left.
Okay, but I have to admit, when you hear all about this potential situation, it does sound dire. So you may wonder, of course, is it easier to simply withdraw from the UK as a sales location, right?
No, absolutely not.
Hey,
And
okay,
not just
good.
because I work in the UK. The UK is a very important market for UK polymer producers, and I think over 50% of all polymer imports into the UK come from the EU. And the EU is the third largest polymer market in the UK, in the EU, and it's an important R&D location with a highly skilled workforce and asset based. And it's also vital, I think, that Meraxis has a presence in the UK to support their customers.
Okay, I didn't want to scare you. We stay, I hope. Okay. No, but of course, Meraxis is a global player. It's a global distributor. Is that an advantage here? And what can we do to, help?
Yeah, there's a lot that Meraxis can do for our customers. We're a truly global entity, and I think we have now 30 offices worldwide. And they bring together sales, purchasing, and logistical capabilities. So, for example, we can capitalize on trade flows around the world. So if we have an area of surplus, we can then send material to an area of shortage to support our customers. The other thing we'd say is we're a global sourcing company. We're not reliant on one single country, so we can move very quickly to where the optimal supply area is. And the other thing that we can do for customers, which some of our competitors can't do, is offer very flexible pricing options. So, for example, we can do normal open negotiation, or we can fix on a formula based on Platts or ICIS, or we can even have fixed price contracts from 3 months up to a year. And this allows our customers to lock in the margin with their customers.
Okay, but nevertheless, are there contingency arrangements made for the case of a no deal?
Absolutely. Meraxis in the UK holds buffer stocks in Liverpool and Felixstowe, so we can deliver in the short to medium term from those stocks. But we've also been working hard with our logistical partners, finding new customs agreements and also new trade routes to avoid the channel areas, so going east or west, Liverpool or Felixstowe. So basically we're prepared for the worst, but hoping for the best.
Okay, fingers crossed. So what would you say, or what do you expect from the UK polymer market? What developments over the next months?
Well, that really depends a lot on what happens with our friend Mr. Johnson in the coming days, whether he gets an agreement or not. But I could confidently say that the UK will be affected by a number of factors apart from Brexit, such as the US-China trade standoff, also the rapid growth of US shale gas material, and also currency volatility, as we've seen this year in the UK and especially in Turkey. Secondly, we have the environmental challenge that we're all very well aware of. And we've seen in the last few days, Unilever, Coca-Cola, Tesco and Sainsbury have all announced that they will reduce plastic or virgin plastic use by 50% in the next 5 years. So that will have quite an impact on virgin polymer production. That said, the market never stands still, and there will always be new challenges and opportunities.
For sure, exciting times ahead. So best of luck, good nerves, strength, and you have a reliable company in your background. So Meraxis is there for the UK market and vice versa.
Great. Thank you very much, Desiree.
Andy, thank you so much. And if you want to learn more about Meraxis, just follow us on LinkedIn. And for further episodes, you can, of course, also visit our YouTube channel. Thanks for watching.